Welcome to Breaking News to Trading Moves. We are looking at a specific transaction today that has, well, certainly caught the attention of the market.
It has.
Palo Alto Networks has announced plans to acquire CyberArk. We're talking a deal valued at approximately $25 billion.
A substantial move. And, it's not just the acquisition itself. There's a secondary headline here about the logistics of the company's stock.
Right.
Palo Alto Networks plans to dual list its shares on the Tel Aviv Stock Exchange, or TASE.
Okay, so we've got the acquisition and the listing location. Let's start with that dual listing. Usually you see companies trying to consolidate on the NASDAQ or NYSE. What's the logic behind adding a listing in Tel Aviv?
Well, upon completion, Palo Alto would become the largest company by market value on the Tel Aviv Stock Exchange.
The largest.
The largest. The stated reasoning is, partly to honor CyberArk's Israeli roots, but there's a very real market function at play here, too.
So this isn't just a sentimental gesture.
Oh, not at all. By listing on the TASE, they'll likely get into the local indices like the TA35.
And that means?
That means local index funds, pension funds, all those institutional investors in the region are effectively mandated to buy the stock. It just makes it so much easier for local investors.
And I imagine it helps with the workforce, too.
Absolutely. It reinforces that region's role as a major hub for cybersecurity R&D. If you want to recruit the best engineers in Tel Aviv, offering stock options in a locally listed company that is, the king of the hill, that's a powerful tool.
Okay, that covers the logistics. Now, the core strategy. Why spend $25 billion on CyberArk? That is a lot of capital for one asset.
It all comes down to the logic of platform expansion. To really get why they're doing this, you have to look at what CyberArk actually does. They specialize in something called Privileged Access Management, or PM.
Okay, let's define that. What's the difference between, say, standard access and privileged access management?
So think of it this way. Standard access is like the key card you use to get into your office lobby.
Get you in the front door.
Right. But PAM is the master keyring. It controls access to the server room, the CEO's email, the backup drives, all the administrative control. It creates the keys to the kingdom.
So if a bad actor steals a standard password, they can do some damage. But if they get a privileged credential...
They own the network. Game over. They can delete backups, change code, shut down the whole operation. That's why PAM is so critical.
And the goal here for Palo Alto is to reduce what you call identity silos.
Exactly. Pull that high-level identity control directly into their security stack.
They want to sell integrated security outcomes to large enterprises.
That's it. By owning the identity piece, they can control more of the security environment. They can be the single vendor that says, we secure the network, the cloud, and the user credentials.
That makes perfect sense. Control the identity, you control the access. Okay, so let's move on to who stands to gain from this. We've broken the winners down into 3 categories. First up, cybersecurity platforms with suite strategies.
Right. A deal of this size really keeps market attention on the platform vendors. These are the companies that can bundle network, cloud, endpoint, and identity controls all together.
Why does this specific deal help other platform companies, though?
It validates the whole thesis. It tells the market that the future isn't buying 50 different tools from 50 different vendors. It's about platformization.
And the benefit for them is selling bigger contracts.
Bigger, multi-year contracts by helping clients cut down on tool sprawl.
And tool sprawl is a real headache for chief information security officers, isn't it?
Is the #1 complaint. Managing 50 different dashboards is just inefficient. It's dangerous. If you can manage everything through 1 or 2 vendors, that is a compelling argument.
So who are the specific players we should be looking at in this category?
Well, obviously, the acquirer sits at the top. That's Palo Alto Networks, ticker PANW.
PANW.
Even though they're spending the cash, this cements their position as the consolidator. Then you have the other major platform players. CrowdStrike is a key one. Their ticker is CRWWD.
CRWD.
CrowdStrike has been very vocal about this. This deal just supports their narrative.
Yeah.
Then you got Fortinet, ticker FTNT.
FTNT.
And finally, in this bucket, Zscaler, ticker ZS.
ZS.
All these companies benefit because investors will look at them and say, okay, these are the survivors. These are the ones building the suites.
All right, so that's the platform group. The second category of winners, identity and access management beneficiaries.
This deal really highlights a core concept. Identity is the new perimeter.
We hear that phrase a lot, the new perimeter. What does that mean in practice?
In the past, security was all about firewalls. You built a wall around the office to keep bad actors out.
Right.
But with remote work, cloud computing,
Yeah.
there is no wall. The perimeter is wherever you log in. If I have your credentials, I'm inside.
So the focus is no longer on securing the pipes, it's on securing the person.
Or the machine. And that's a key point. It's not just about humans anymore. It's about securing machine identities, servers talking to servers, and even AI agent identities. This deal really accelerates enterprise spending on all of that.
So which companies are we tracking here?
Okta is the primary pure-play name that comes to mind. Their ticker is OKTA.
Oh, KTA.
I mean, if Palo Alto is willing to pay $25 billion for an identity company, it suggests that the independent identity players are undervalued.
And the giants.
Of course.
Yeah.
You have to look at the tech giants heavily invested here. Microsoft, ticker MSFT.
MSFT?
Microsoft is massive in identity with Active Directory and Entra.
Yeah.
And Amazon, ticker AMZN.
AMZN.
As the biggest cloud provider, managing who can access those cloud resources is just core to their whole business.
Okay, let's look at the third category of winners, the cybersecurity deal ecosystem.
This is all about market valuation mechanics. When a market leader pays a premium for something, it sort of re-rates the adjacent niches.
Explain that re-rating process for us.
Okay, so suppose you own a house, and your neighbor sells their house for a record-breaking price. Suddenly, your house's estimated value goes up, even if you did nothing.
Right.
Same thing happens here. It raises expectations for more consolidation. Investors start looking for the next target, expecting other big vendors to buy up these best-in-class point solutions.
So these are potential targets, companies that might see their valuation adjusted up because of the premium paid here.
That's the logic. A name that comes up is Cloudflare, ticker NET.
NET.
They have a massive network, and they're often seen as a potential target for a larger player. Then there's Sentinel, ticker S.
Just the letter S.
That's it. A smaller competitor to CrowdStrike, making them a more bite-sized acquisition target for a legacy tech company trying to get into security.
Yeah.
And also Gen Digital, ticker GEN.
GEN.
These companies are basically the inventory for the next big deal.
Okay, so those are the winners. Now we have to look at the other side, the losers. Or maybe the companies facing more pressure. We have three categories here too.
That's right. The first category includes direct competitors in identity and enterprise security.
And what's the specific pressure they're facing?
It's share of wallet pressure. Security budgets are not infinite. A more complete Palo Alto stack just creates tighter competition in those large enterprise accounts.
Because the buyer can get more from a single vendor, a single invoice.
Exactly. If a buyer wants fewer vendors and integrated reporting, a competitor offering only a piece of the puzzle is at a disadvantage. They have to fight harder for every dollar.
Who fits into this category?
But Checkpoint Software is a direct rival. Ticker CHHKP.
CHKP.
They compete directly with Palo Alto on firewalls, on cloud security. A stronger Palo Alto makes their life harder. And Splunk on the data and reporting side. Ticker SPLK.
SPLK.
Right. If Palo Alto can keep all that security data within its own platform, the need to send it to a third-party tool like Splunk just diminishes.
Now, the second category of losers, pure play point solutions. This feels like the other side of that platform coin we talked about.
It is. This gets into bundling risk. We said platforms win by reducing tool sprawl. The inverse is that standalone tools face tougher renewal talks.
But isn't there an argument that the standalone tool is often better quality? The specialist versus the generalist?
That's the classic best-of-breed versus platform debate. And yes, a specialist tool might have 10% more features, but if a CISO is trying to rationalize vendors, they might decide that the platform bundle is just good enough.
So the good enough bundle can hurt the best-in-class specialists.
Especially in a cost-cutting environment, yes. It leads to pricing pressure, longer sales cycles for those point solutions.
So which companies are at risk here?
Tenable is one. They focus on vulnerability management, ticker TENB.
EENB.
And we have to mention Cloudflare again here, ticker NET.
NET. Now, wait a minute. You mentioned Cloudflare as a winner in the deal ecosystem category, but now they're a loser in the point solution category. Can you explain that?
Yes, and it's all about context. As a potential acquisition target in an active M&A market, they're a winner because their stock might carry a premium. People might buy it hoping for a buyout.
Okay.
However, as a standalone business trying to sell against a giant bundled platform like a combined Palo Alto-CyberArk, they face more operational risk.
So good for the stock if they get bought, but tough for the business if they have to fight alone.
Precisely. They're on both lists for very different reasons.
Understood. That's a helpful distinction. Okay, final category of losers. Smaller vendors dependent on partners.
This is all about the channel.
When you say the channel, you mean the resellers, the consultants who actually sell the software.
Right. And a major acquisition like this reshuffles priorities. Partners who used to fill the identity gap for Palo Alto with a third-party solution might now lose that revenue stream.
Because Palo Alto now has its own product to fill that gap.
Correct. The platform now owns the solution. Palo Alto will almost certainly incentivize partners to sell the in-house version.
Which creates a loss of mind share. The salesperson at the reseller has no reason to even bring up the smaller vendor.
Exactly right.
Who are the names to mention here?
Gen Digital comes up again here. Ticker GEN.
GEN.
And Rapid7. Picker RPD. Rapid7 relies heavily on channel partners. If those partners shift their focus to the big platform bundles, Rapid7's pipeline could suffer.
So we've covered the winners and the losers. Now, what should we be watching for next? I mean, a deal announcement is just paper until it integrates. What are the signs that this is actually working?
There are three main things to watch. First is integration. How quickly can Palo Alto actually integrate these identity capabilities into its broader platform?
Speed is the key factor there.
Speed and execution. The goal is cross-selling. They need to sell CyberArk products to Palo Alto customers and Palo Alto products to CyberArk customers. If they can't show a measurable lift there, the deal loses value.
And the second thing?
The listing. We need to watch the timeline and mechanics of that Tel Aviv dual listing. As we said, it's a bit of a unique move. It will be worth noting if other U.S.-listed tech names follow suit.
And the third?
The response. You have to watch the competitive responses from the other large suite rivals. Will they adjust pricing, create new bundles, or will they do their own M&A to match this?
It sets the stage for a pretty dynamic period in the sector.
It does. When the largest players make moves of this size, the rest of the market has to react. They can't just ignore it.
Before we wrap up, I want to leave our listeners with one final thought. We talk a lot about the technology and stock prices, but there's a human element here. Mergers of this size often hinge on culture.
That's very true. Technology integration is hard, but people integration is harder.
Right. Blending a massive U.S.-based platform with a specialized security-focused Israeli firm. That's not just a code integration challenge, it's a people challenge. And that's often the silent variable that determines success or failure.
It is. If the engineers who built the product leave because the culture changes, the value of the acquisition just walks out the door with them. Retention is going to be just as important as recruitment.
That brings us to the end. I do need to read a brief disclaimer. This is not financial advice or buy or sell recommendations. This is purely the opinion of the author.
Thanks for listening.
Thanks, everyone.